Hello, thank you for tuning in. If this is your first time, welcome. We are starting to get some increased traffic, which is really exciting. As I'd indicated in previous videos, we are trying to build a community of subscribers who are interested in insurance, in superannuation, or looking to understand what type of insurance cover they are getting within their superannuation arrangements. Today's session is all about trying to understand what insurance you would get if you were joining a new employer. With the optimistic indicators of case numbers today, it looks like we are heading the right direction, and hopefully when the economy recovers, employers will start hiring people again. And hopefully by watching these videos, you'll have a better understanding of the insurance arrangements you're going to get through your superannuation when you join your new employer. There are a couple of things I want to point out. There's a difference between automatic insurance cover that you may get from your employer, where you don't really have to do anything and you'll just be covered automatically, and the other one is where you have to voluntarily ask for insurance cover. So joining a superannuation fund is just like entering a house. You've got a main door, which would represent your eligibility for insurance cover. To enter that main door, you would need to be within the age range of somewhere around age 15 to 65. Some funds would actually offer cover to age 70. The other one is you must be an Australian resident. And of course, the last one is you have to be an employee of that employer that you just joined. If you satisfy those three things, generally you are eligible to have insurance cover. Once you enter that main door, you will be confronted by two extra doors inside. One is locked and one is unlocked. The one that is unlocked would be called automatic insurance cover door, whereas the other one will be called voluntary insurance cover door. If you enter the automatic insurance door, there are three main things that you would need to generally satisfy. A, you must be actively at work. In other words, you are able to undertake the duties that you were hired to do, which is probably highly likely because you've just been hired as a new employee. The other two are about satisfying thresholds. One is an age-related threshold, which means you must be over the age of 25. And the other one is having to satisfy a minimum account balance of $6,000. Now, those two thresholds are not the insurer's condition. They are not the trustee of that fund's condition. They are law. They are the new regulatory change that were introduced on the 1st of April 2020 this year, where the government has labelled it putting members' interest first. So that legislation requires you to be at least age 25 or over, and you must have at least $6,000 in your account. Of course, an additional requirement is for you to have sufficient monies to pay for the insurance premiums as you enter that door. However, once you enter that door, you will have limited cover only. Now, if you've watched my videos before, I have explained that limited cover means you're only covered for new events or new conditions that you have sustained from the date you open that door. If you had a pre-existing condition before entering that door, that condition will not be covered for a period of time. Some insurers have 30 days, some insurers have 60 days. It depends on the policy that's covering your super fund. Now, as you enter that door, the way I would best describe it is you won't have full access to all sections of that house. However, if you were to enter the other door that was locked, I would call that the voluntary cover door. That means that you won't have access to open that door unless you have the key. And the key to that door is for you to provide satisfactory evidence of good health. If you were to provide that information and you were accepted because you're a healthy risk, then you'll get the key to open that door and you'll have unlimited access to all features of that household behind that door without being subject to limited cover. So just to recap, you will have access to eligibility for cover as you enter the main door if you satisfy the age range, which is generally somewhere between 15 to 65, sometimes to 70. And you must be an Australian resident, and you must be an employee of that employer that you just joined. As you open that main door, you will be confronted by two extra doors: the unlocked door, which is the automatic acceptance cover, and the locked door, which is the voluntary cover. To access the unlocked door, you'll have to satisfy your thresholds for age and account balance, and also the fact that you are actively at work. However, if you want to access the unrestricted areas, it would be better to go through the voluntary cover door, and the key to that door is you providing satisfactory evidence of good health. And once you pass that test, you will have full access to all the restricted areas behind that door. I hope that makes sense. Hope to see you again next week, where we will talk about what you'll get out of your insurance cover while you are a member. Hope you tune in again soon. Happy Friday.